The broadcast is now starting. All attendees are in listen-only mode.
Hello, and welcome to today's webinar, Industry Experts Guidance on Business Resources Needed to Navigate COVID-19, presented by our sponsor, Heffernan. We're so happy you can join us. My name is Deb Beto, and I will be your moderator today and be monitoring questions you may have during the session. Before we open up the session, let's review a couple of key items. All of the webinar materials we discuss can be found at the Heffernan website, which we will share with you after the presentation. I will be sharing this in a follow-up email, so don't feel like you need to have it right now. If you have trouble with your internet connection during the webinar, we recommend leaving the presentation and logging back in. If you have audio difficulties or a telephone line goes dead during the call, hang up and call back again to the same number. If all lines go dead, watch the on-screen chat box for an alternative call-in number. Please feel free to ask questions or provide feedback by using the chat box or questions box during the webinar. If you are using a tablet, you may need to tap on the screen for the options bar to appear, and then you can select the appropriate option. We may not respond immediately, but we will try to work your questions or feedback into the presentation. If we can't get to your comment or question during the session, we will be online afterwards to respond, or we may follow up in an email if we run completely out of time. You may also email us at moderator@aspenrmg.com for up to 48 hours after the webinar. This will be a 1-hour presentation. Questions and comments are very much encouraged throughout, and the presenters will be answering questions at the end. And lastly, we have a number of webinars upcoming covering a variety of topics, including those listed at the Heffernan webinar website. In addition, we offer the mandatory Preventing Harassment training in English 3 times a year. With that, let's begin today's webinar, Industry Experts Guidance on Business Resources Needed to Navigate COVID-19. We have a panel discussion today from 4 different companies. From Heffernan Insurance Brokers, we have Melanie Conti, Steve Parkhurst, and Janie De La Rosa. From BBVA USA Bank, we have Paul Duran. From the law offices of Gordon and Reese, we have Hugh Williams. And finally, we have from CFOs to Go partner Chris Burns. So I'm going to now turn the presentation over to Steve, and he will walk you through today's presentation. Thank you.
Thank you so much, Deb. I appreciate it. Thanks for your help with the webinar. Thank you to all the folks that signed on today to listen to the experts and myself. I have trouble referring to myself as an expert, but I do know insurance pretty well. Actually, the last event I was at was the CDSA legislative day up in Sacramento. We were already bumping elbows and saying hello that way, and it was the beginning of all this. I think a week later, approximately, of shelter in place started. So here we are again. I wish we were all in person and able to see each other, but we'll be there soon. I also hope everybody's staying safe and healthy, and your friends and family are as well. So, all right, let's dive in. So when the dust settles from all this, we can all come out on top. Hold on just a second. There we go for the slide. That is where I should be. It's me, Steve Parkhurst now. We're going to talk a little bit about the history very briefly. Post-SARS breakout in 2003, kind of what brought us to this point. It was a little testing, kind of putting our feet in the water with the virus environment. Insurers carriers didn't have specific exclusions, and that was what happened after the SARS outbreak, was exclusions began entering policies, excluding virus as a covered loss. And that's what creates some of the challenges today. So business income is part of a property coverage, and you need a trigger to have that coverage come into play. For instance, like a fire in your building triggers the coverage from the damage of your property. So since the outbreak and some of these exclusions were put on policies, Now, majority of them have exclusions. You can, however, find some policies that may be older, where the underwriter has just neglected to put the exclusion on, or where a carrier may just not have the exclusion on. So it's very important to read your policy and know your policy wording. You're going to hear me say that a few times today. But how can you be prepared? So know your policy wording. Know if you have that exclusion in there. Even if you do have the exclusion, I'll touch on this a little bit. It's still important to sort of track where you're at. If you're having a loss of income, have a business income worksheet filled out that will allow you to know how much you need a limit of business income and an accurate limit. Every carrier will have a specific business income worksheet, but they also will sometimes take some others, and we have those available, and your broker should as well. Keep track of all your expenditures during this time. We're not quite sure when the shelter in place will be lifted, and it's important to know how much damage you have had and which areas. So I would, if you're having any losses or any damages, less revenue, I would keep track of everything. I've had questions about what is the best way? How do the carriers want you to keep track of this? That's uncertain. I think the carriers will have some flexibility. I'm a big fan of the old Excel spreadsheet. So I would just recommend tracking it in some way. What else is very important on your policies is the vacancy clause. Many policies have a vacancy clause where the policy will not be in place if the location is vacant for 60 days. It's kind of a typical amount of time, but that can vary as well. So it's important to reach out to your broker, your carrier, and find out, do you have a vacancy clause? How long is the vacancy clause? If it's 30 days, we're getting past that point. If it's 60 days, we're going to be getting to that point. So find out. Most carriers are not holding the vacancy clause in there and staying true with it because of what's going on. So just make sure that they're aware, you're aware of what if that vacancy clause is on your policy. So Insurance Commissioner Lara on April 13th came out with a statement basically asking insurance carriers to return premium, reduce premium, and credit premium back to the insurers. So this is great news. Everybody in this pandemic, we're in very uncharted territory, uncertain times. There's a lot of fear out there, and there's a lot of challenges that we've never been faced with. So everybody's kind of looking where they can help, and everybody's looking out to see where they can get help. Insurance is definitely going to be one of these areas that chips in and helps with the costs and the struggles that businesses are having. However, Commissioner Lara's statement really rang the bell, and the phone started ringing. People said, can I get my premium back? There's a little bit more to it than that. The commissioner actually said that every single carrier, and for instance, Heffernan has appointments with over 760 different carriers. As an example, there's a lot out there. 60 days for every carrier to put together a plan and then share that plan with the Department of Insurance. Then they have another 60 days to implement this plan. So essentially that's 120 days until we're probably seeing any sort of adjustments. That could be faster, but my true feeling on this is that this will be further revised or tweaked or maybe a different direction. There's a lot of uncertainty and room to work with. So if we have 750 carriers doing different refunds and credit and exposure changes, it's going to be hard for everybody. So I feel like this may get some more tweaking, but stay tuned. Again, uncertain, uncharted territory. One of the other things that's uncertain is he doesn't really say how to do it. Premiums are created from an exposure, which could be payroll, revenue, number of participants. It varies depending on the coverage and policy. Then you times that by a rate, and that essentially makes your premium. So it's unclear if these reductions and relief of premiums will just be a reduction of the exposure that was estimated at the beginning of the policy period, since that's now less than what originally estimated. Is that going to change it, or is it going to be a reduction in rate? These are things that will still come out in the next coming days. Moving over to workers' compensation. I need to speed up a little bit. I'm on the clock here, so I'm going to talk a little bit faster. First responders are covered for healthcare and health-related industries. Other industries may be covered. Carriers are responding in different ways. We've been reaching out to our workers' compensation carriers. Some have been very accommodating and understanding. Some are pushing back a little bit. So they're all having a little different reaction, but most are pretty accommodating, understanding that there's going to be some adjustments to payroll. However, you should reach out because it's important to know if they want the estimates now. Do they want to wait till the dust settles, we're out of shelter in place, and we enter the new normal, and you have a better idea of those payrolls? So just know how your carrier would like this information given to them and when. The WCIRB, the Workers' Compensation Insurance Rating Bureau, also came out with some regulatory filings that they're suggesting. They still need our pending DOI approval. That hearing is on May 18th, but we are anticipating them to be approved. They are right here listed on your screen. Excluding COVID-19 claims from experience rating, this is big for future premiums because that could have a very bad effect. It increases costs for multiple years in the experience rating. Excluding payments to employees who continue to be paid while not working. And lastly, allow assignments of classified 8810 for those employees that are now working from home. So if you have employees that were different classifications, now they're working from home, like many of us, you can now classify them as 8810. And also important point to note, OSHA is a recordable illness. So if you do have COVID-19 is recordable with OSHA. So if you do have a COVID-19 illness, make sure to check with OSHA and check their website for other guidelines of OSHA. Just checking on some practical items here. Some of this I covered, some of it I didn't. Cyber is really a hot button right now. There's an increase in cyber attacks with all the Zoom and technology being used for communication. I'm sure we've all been on the Zoom happy hour at some point. So check your cyber limits, make sure you're comfortable with them for your organization because hackers are getting more aggressive. Payments, cancellation, exposures, and costs, I sort of covered. Find out now what your carrier is doing. Do they want to know information now or would they like it later? And make sure that you're in good standings there and ready for how they'd like it to be presented to them. On policy renewals, carriers are not getting stuff out as quickly as they were, but before everybody's still working from home, and carriers are sort of taking a slow approach to this because they want to see what's going to happen. Nobody really knows what we're going to be going into when shelter in place is lifted. So carriers aren't jumping at the gun to make changes. They kind of want to see where we're going. But as you go through policy renewals over the next few months, make sure you're going to have to give estimates, and it's hard to give estimates in this environment. So it's okay to be kind of conservative with those estimates, but be aware if your policy is auditable. Some policies are not auditable. And lastly, make sure to review if there's been any new exclusions or restrictions added to your policy. Also, check on the vacancy clause, loss of income, consider the loss of income worksheet, and most importantly, document. I've sent out some telework agreements, some home ergo, which hopefully everybody's found helpful. And we still have that available. If anybody needs any other documentation, please just reach out to us and let us know. So what we do know is there will be a new normal. I love this quote from Bob Dylan. Our CEO of Heffernan, Mike Heffernan, has had the times are changing in his office for 30 years on this picture. So I felt like this quote was good for our presentation because we are entering a new normal and nobody's quite clear on how that will look. Heffernan this is pretty cool stuff. We're going to be sending this out to all of California Disabled Service Association today or tomorrow. This is available to anybody that would have a minimum of 40 tests. It's a COVID-19 antibody test. It can be picked up by insurance carriers, but I'll let Janie talk a little bit more on the health benefits side about that piece. But keep an eye out for this being coming out today or tomorrow, and let us know if you'd like to take us up on it. Or of course, you can reach out to us and we'll get you set up with them. And lastly, we're going to see a lot more coming out in terms of safety precautions for the workplace. So this is one that we're looking at. We're vetting a lot of them and kind of entertaining a lot of them because there's no one product that works for everybody. So we like to have different options, and there's going to be different options, more and more of them coming out. This app actually will track the temperature of your employees. There's 3 different ways to track it. One is self-administering, so there's kind of a trust factor there. Another one is having managers do it with a non-invasive temperature gadget. And so the first thought here is it's a little fine line with the big brother, but there's also comfort and security knowing that your team or the people you're working with are healthy. So this will also develop, but I just wanted to share this as we're looking at more and more resources and services in line to make sure that the workforce is happy and healthy. And so on that note, now for an update on the health benefits, I'd like to pass the baton to Jamie De La Rosa. She is a Senior Vice President at Heffernan Insurance Brokers and a true leader in our health benefits division. So Jamie, the floor is all yours.
Thank you, Steve. Good morning, everybody. So I wanted to talk quickly on some of the carrier response from your health insurance carriers. For those of you who have employee benefits in place for your employees, we do have some updates. Premiums and billings, we've been very successful in having the carriers commit to payment leniency and grace periods. So if you are in a situation where you need to maybe extend your grace period on your premium, or maybe have a 30 or 60 day extension on that, you can have your broker call and request that from your carrier. The other thing is that some ancillary carriers, which are known as the non-medical carriers, so your dental, life, disability carriers, are coming out recently with no rate increases this year. Some of them are extending a rate cap for next year. And we've also seen some of them lower their premiums for second and third quarter of 2020. So we've seen everything from a 25% reduction in your premium that happens automatically, all the way to, the next 2 months are going to be free. So it's been, the carriers have been very good in trying to mitigate that cost for you. Also wanted to mention that the Paycheck Protection Program, for those of you who are eligible for that, your health premiums can be paid with those dollars. So we wanted to just make sure that you were aware of that. Also, for those eligibility questions that you might have with regards to reduction of hours on your employee workforce, maybe you have an employee who, or a group of employees who you need to furlough, but you want to keep them on the benefits. Carriers are allowing that, even though they're not actively at work. They're also allowing for rehire periods for those furloughed employees or employees that are being put on hold for a month or two. They're allowing rehire waiting periods to be waived. So there's lots of flexibility within the landscape of your employee benefits. And we urge you to just give us a call if you have questions or if you need assistance with your carriers, and we can help out that way. On the next slide, so on the next slide, we're talking about the benefit modifications of the carriers. And so we wanted to bring this up only because a lot of the carriers are now amending their contracts to allow all the COVID-19 testing. So prior to the pandemic, there were deductibles or co-payments. A lot of that is being waived at this point. For those of you who have telemedicine, we want to just remind you that your employees can access that with no co-pays. And that's COVID-19 and non-COVID-19 symptoms that they may be having. So that is something that, telehealth is actually very, very large right now with the pandemic, with the shelter in place, and just employees not wanting to go into the health facilities right now for non-COVID items. The other really big thing that might affect a lot of you on the phone is that high deductible health plans, so HSAs, HRAs, any policy that has a $1,500 deductible or more, those deductibles are going to be waived for any COVID testing or COVID related health conditions. So the IRS basically put those rules in place where if you have an HSA or a high deductible health plan, you have to meet that deductible first. However, they have removed that language on the majority of the contracts out there. So your employees will not have to face a deductible if they need any kind of testing for COVID-19 related conditions. So that is basically the gist of some benefit highlights and modifications that we wanted to address with you. We will be having a Q&A after, so I'll be available with any questions that may come up, as well as the questions that Steve mentioned on the antibody testing and how that will work for your company on site if you decide to take advantage of that. So,
and Janie, really quick.
Oh,
sorry, Janie, could you talk a little bit about what you mentioned about the health benefits carriers picking up the cost for those tests? Are they picking it all up, or how is that right now?
So what Steve is referring to is the testing, the antibody testing that was FDA approved on Sunday, which is April 26th. We received FDA approval for that. So employees, members, actually anybody can sign up to get the antibody test, and that test is about, I think it's $75 per test. And if there is more tests that are needed, there's another $100 copay. We have a relationship with a partner that will do all of the testing, come on site, and actually provide all that for you, as well as submit all of the costs involved to your employee's health insurance carrier for reimbursement. All the carriers have pretty much been on board with the reimbursement because it's part of the CARES Act. However, we do have a couple of very well-known providers in California that are trying to create their own testing, which there may be a question about reimbursement on that. However, we will treat all of the individual companies that reach out to us, we'll treat them individually. So if you have your health carriers, we'll pre-qualify those and let you know if they're eligible for reimbursement or if there will be payment required. But it's voluntary. So if you do put this out for your employees, everybody will be able to sign up on a voluntary basis. So the next slide, that is going to conclude my portion of it. What I'd like to do now is introduce Hugh Williams, who is a partner for Gordon and Reese. And Hugh Williams is going to be talking about the legal aspect. Hi, Hugh. Are you on?
Hugh, we can't hear you.
Okay. So Hugh, I know, is trying to get signed on a different way than our initial run through to make it a little bit better for everybody to hear. So she's calling in right now to take over. So we might go 5 minutes, a little bit longer than planned, or a couple, but that's mainly due from me talking too much, which is kind of normal. So just hang on for just a sec while Hugh comes on in.
Hugh,
just take her a quick minute.
Hugh, if you're not here yet, if you're here, go ahead and let me know. It looks like you're unmuted, so we should be able to hear you. But while we're waiting for Hugh, Janie, we had one question that came in. Can we change contribution rates for employees mid-policy period to help mitigate costs during this time?
So that's a really great question. So basically, I believe the ask is that can you change the contributions on your employee benefits mid-year prior to renewal.
Right.
And, you know, I got to say that's going to be a gray, it's going to be dependent on your carrier, and it's going to be a gray answer on your carrier. And typically what they will do is work with you in terms of that. The contributions, as long as you're meeting the minimum contributions, which is typically 50% of the employee cost, as long as you're meeting that, they're not going to really do much. The carriers won't do much to get involved in that. However, it does depend on your individual carrier.
Okay. And so Hugh, are you there now? It looks like you're self-muted. So if you can unmute or...
I think I'm on now. Can you?
There you go.
Can you hear me now?
We hear you. Thank you. Yes.
Okay, great. Sorry about that. Even the best of run-throughs is, you know, still scary when you're doing a presentation. So I apologize. Thank you again for having me on this webinar this morning, for everyone for joining us. Steve, could you go back to my little bio page? And the reason why is my email is on there. And I know we're running short on time, and there's going to be a lot of questions, especially after I gloss over some of the legal elements. So please, you're attending this webinar and I don't touch on something that you want, please email me, reference webinar, you're a Heffern and related client, and I'll absolutely talk to you and set up time to discuss any questions you might have. So what I do is I represent employers and supervisors in defense of claims of wrongful termination, retaliation, harassment, discrimination, and I also offer guidance on best practices. And I know that there's a lot of gray area with COVID-19 and the pandemic. So let's jump right in. If you go to the next slide, Steve. These are the things that I'm going to cover. And then, so first, we'll talk about really quickly meal periods and rest breaks when folks are shifting to remote work. Next slide. Okay. So keep in mind that when you have employees who weren't working from home, who are now working from home, and if they are non-exempt, meaning they're not salaried and they're clocking in and clocking out, that the meal periods and rest break laws still apply. And just a quick refresher, employers are required to provide 30 minutes of an unpaid meal period that needs to begin no later than 4 hours and 59 minutes into the shift. And if the shift is less than 6 hours, then that can be waived by mutual consent of the employer. Then you need a second meal break if the employee is working 10 hours. And it usually needs to be recorded in the same way. So usually when somebody's clocking in and clocking out. Employers are also required to provide 10-minute rest periods for every 4 hours worked or major fraction thereof. So basically, if they're working almost like 4 hours, they need a 10-minute paid rest break. So typically in an 8-hour workday, an employee gets 2 10-minute rest breaks. And again, these rest breaks should be, you know, towards the middle of each work period. It's usually not recorded. And during these rest breaks, all employees need to be relieved of all duty. The employer needs to relinquish control over all activities, and the employee gets to do basically whatever they want. Now, why is this relevant? Because if everybody's working from home, basically everyone is, you know, working at their leisure. They can go to the bathroom, they can tend to their children, do whatever they want, whenever they want. However, there are going to be tons of lawsuits, I imagine, or my firm imagines, coming from working remotely. One of them is you don't want to get an employee coming back to you and saying, I ended up working all the time and didn't have the opportunity to take meal periods and rest breaks. And how they'll show that is they will show that they've logged into their computer and that they were continuously working. There's data out there, metadata, that can show that they were constantly emailing, chatting, on calls, and they didn't have a reasonable opportunity to take a break. Now, those claims can be somewhat defeated as an employer. You can say you were at home, I didn't, you know, tell you what to do. But fighting those lawsuits is still going to take time and money. So to prevent those claims, those frivolous claims, and to nip them in the bud in the beginning, there's a couple best practices that you can do that'll just discourage it and set yourself up in a good position to say, look, your claim is bogus. We're not going to do anything about it. So you want to make sure via email and in writing that you remind employees, hey, you're working from home, but you know, we still expect you to take your legally, you know, required meal period and rest break. Remind them they're in charge of their own schedule and that they need to log out and log in, that they need to take breaks for their own mental and emotional health, that you don't expect them, although that they're working remotely, to be answering emails and phone calls at all hours of the night. And that's another thing, is an employee can say, I've been working all day, and then they get an email at 8 p.m. and they decide to respond, but then you'd have to pay them overtime as the employer. So keep those things in mind. You want to communicate that that's not expected of them, that you expect them to do a regular work day, that you expect them to take meal periods and rest breaks, and that they're in charge of clocking in, clocking out, or documenting those things. Let's see. You want to regularly talk to your managers and supervisors and make sure that they get the message and that they're conveying it to their non-exempt employees as well. Another big thing for employees that are now shifting to working from home is expense reimbursement. So with expense reimbursement, one second, employers under Section 2802 of the California Labor Code, employers are required to reimburse employees for the reasonable and necessary expenses that are incurred as a direct result of work. And this is to prevent employers from passing on their operating expenses to employees. Now, the Labor Code, this section, it liberally applies to expenses. And for us, with employees working remotely, the first two things that I can think of off the top of my head are your cell phone and your internet. And the reimbursement requirement applies even if the employee already had a cell phone and already had, internet capabilities for personal use, and now that they're using it for work-related use. And there's a little bit of a gray area, again, because the law states that it's a reasonable reimbursement. And a lot of my clients ask me, well, if somebody has a cell phone bill of $100, how much is reasonable? Well, you could either, one, ask your employees how much of their cell phone or their internet is being used for work. But I think as a general rule, you should expense it or reimburse at least half of it, 50%. Again, it doesn't require that you reimburse for the top of the line or fastest internet or the biggest data plan, but just, what you think is reasonable. And I think it's better to err on the side of caution. If you offer a 50% reimbursement or, some sort of amount, make sure you have a little clause in there that says if the employee feels that the reimbursement doesn't sufficiently cover what their expenses are, is to talk to you offline and you can address it that way. But again, that would include what if, your employee has to go buy a wireless modem, your employee has to use their own personal laptop for work because they didn't have one before. So you want to make sure that you are providing loaners or letting them know that you can send them a laptop or something like that. Otherwise, you could get a claim later from an employee saying, I had to use all my personal items and now I want reimbursement for those things. Again, that might not be that expensive at the end of the day, but being such a lawsuit then becomes expensive. One other thing to think about is IT issues and confidentiality. I know Steve talked on cybersecurity concerns. And, since most of us are working remotely, we usually have basic Wi-Fi passwords. Nobody has a firewall. I don't know who does as a regular worker, but you want to make sure that you're providing some sort of training and warning on phishing scams. You want to, to the extent possible, encourage your employees to keep work laptops separate from laptops or desktops that their children or spouses use, because if they're downloading things, they could get viruses on your computer software, and you don't want to have to tell your clients that there's been a data breach to their personal information. Okay, next slide. Another thing that's important about shifting to remote work is still maintaining your ability to effectively manage your employees. You'll want to communicate and document clear job expectations. And this is important if folks are shifting job duties. They used to do one thing in the workplace, but now that they're working from home because you didn't want to furlough or lay them off and they're kind of doing a mix of job duties, you want to communicate to the employee in writing these job expectations. When you are working remotely, this is what I want you to work on. These are the projects. These are the clear deadlines. So that if issues arise, you are able to effectively deal and manage that person's performance. Most of your best employees are going to keep performing well. It's the employees who weren't performing that great before that are just going to take this opportunity to do even less. And so you want to make sure you have those discussions with your management about how are you supervising these employees remotely, since you cannot be there all the time. And then also make sure you're documenting performance reviews and that if you're being lenient, you should be during these difficult times, but you want to be consistent. You don't want to be accused later of being lenient to one person or another. And remember to document all your conversations. So we get to the next slide. This is basically the meat of what a lot of folks want to know about. So protecting employees in the workplace. I'm just going to run through these. These are what I find to be the frequently asked questions right now, and I can email you the answers. But the first question is, main employer employees home if they display COVID-19 symptoms? Yes. So employees who become ill with the symptoms of COVID-19 at work, they should leave the workplace. So that's for folks who are at work. And then if they report to you that they're at home and they can't perform their job duties because they have symptoms, you should let them know, don't work or go home, or take care of yourself. An employer, you have to provide paid sick leave and compensate an employee under the paid sick leave laws if they say that they are sick. If their sick leave is exhausted, they could be entitled to unpaid leave, so let them use their vacation or any other PTO, or just say, hey, we're going to let you have paid leave till we figure this out. It's better, I think, what I'm advising clients is better to be on the side of caution and be generous. If a claim comes out of this, you don't want to be the employer that was really harsh. It's not going to play well in front of a jury. Next question. During a pandemic, how much information can an employer request from an employee who says that they're feeling ill? So you can ask if they're experiencing COVID-19 symptoms to describe them. So you want to hear whether they have fever, chills, cough, or sore throat. You want to maintain all the information that the employee gives you is confidential, and you want to document that they gave it to you. And, we're basically going off trust here. And if they give you different symptoms, also note that. Next question. During a pandemic, may an employer take employees' temperatures to determine whether they have a fever? And this is something new, and generally, based on the current guidance, you can measure employee body temperature to evaluate the risk of them coming back to the workplace. An employer does have a duty to create a safe workplace. And so if an employee were to say, I have a fever, and if you didn't do anything about that, such as take a test, and they later infect another employee, that could be a very difficult situation to handle later. And during a pandemic, can an employer ask employees why they've been absent for work if they suspect it's for a medical reason? Yes. You want to be very careful, though, because if they say if it's for a different medical condition or disability, then you don't want to specifically dig into those issues, as that can bring a discrimination claim, but just ask them if it relates to COVID and to describe their symptoms. And then finally, if an employer comes to you and says they've tested positive, they've come into exposure with someone, their spouse has COVID, what can you do? Or what should you do? You do want to disclose to other employees in the workplace, again, if this person is coming to work, that there may be potential exposure, but you want to maintain HIPAA rules. You don't want to disclose who the person is, but you want to provide enough information so that the other employees know that there's a potential risk of exposure and that they should get tested or that they should self-quarantine. And you just want to make sure you just notify the employees immediately. It could be a quick email that says, hey, just want to let you know, we've had someone report COVID-19 symptoms. We don't know for sure if they have it, but we want you to be aware so that you can take the appropriate steps. Next, I know I'm talking very fast, but like I said, email me afterwards. And then the next slide. So there's the Family First Coronavirus Response Act, FFRCRA. And again, these are the slides that have a lot of law on them. And I can email you guys separately, but I'm sure most of you have heard this law expands FMLA leave to now allow for unpaid leave for employees who need to care for children because their schools are closed because of COVID. It also created 2 weeks of paid sick leave for an employee who needs childcare or other leave related to COVID, and then it provides tax credits. And remember, this is effective as of April 1st, and it applies to employers who have less than 500 employees. The big question here is, do I have to provide the paid sick leave or the leave for someone whose school is closed if they're furloughed? Again, if they're furloughed at any point now, or if they were furloughed effective after April 1, then no, they don't need to be given this leave, this paid leave. Next slide. Or if they're laid off. Steve, next slide. This basically summarizes the law that I just said, and in the essence of time, I'm not going to go over it. Next slide. And then these are the 5 instances where the emergency paid sick leave would come into play. There's a shelter-in-place order or quarantine order or isolation order, and your business stops and the employee cannot work, then they would be entitled to this 2 weeks of paid leave. And then if they have a self-quarantine, if they have symptoms, they have to care for others in school closure. Okay, last slide.
And thank you, Hugh. We're really trying to fit in a lot of information, so we're going to just go a tad over probably the Q&A. May go over the hour, but just wanted to let everybody know we added Chris, who is going to talk about loan forgiveness at the end of our presentation, which we thought is a very important topic right now. So thanks for hanging in there with us. Of course, if you have to leave at 11, feel free to follow up with us with any questions. So I'll pass it back to you, Hugh.
Thank you. I'll just take 1 minute on this slide. A lot of the questions are, should we lay somebody off or furlough? What's the difference? A furlough basically is a temporary unpaid leave. So the employee is still an employee, is on your books, you're paying for their benefits, you're just saying we don't have work for you, and it's a temporary unpaid leave. A layoff means an actual end. You are laying them off. They are not an employee anymore, and you're cutting them loose. When you're thinking of who to furlough or who to lay off, you can use seniority. You don't have to. You want to, take the opportunity to maybe get rid of some poor performers. You want to be aware that when you're laying or furlough people off, you could get a discrimination claim. So you want to make sure that you document your process. You're consistent. You could say we decided to furlough everybody based on seniority, or we furloughed everybody based on work need, or the demand for work, etc. So just and take a look. Do you happen to be furloughing all the people who are over the age of 50? Do you happen to be furloughing all of the people in this demographic? So you just want to be aware of those issues and document what your thought process was. Make sure though, when you are laying off or furloughing, that you pay out their vacation. And this is also an opportunity to get severance agreements from folks. And if you pay them any money other than their vacation, get a release. You guys have my email, so please email me if you have any questions. I know I went over a ton of information, and I'll send it now to Paul Duran. He's going to talk about the banking and finance issues. Paul is the Senior Vice President at BBVA Creating Opportunities. Thank you.
Thank you, Hugh. Thanks, everyone, for joining me. Thank you, Heffernan, and the CDSA. You've got a cause that's personal to me, and I appreciate the opportunity to address to you. So I'm going to cover a few things. One is, how did we get here? What is actually in the loan program, and kind of what the status is now. I think for those who have a PPP loan, that you've kind of been through it. Chris is going to be a very important part of this. The other is that in reading the Nonprofit Times this morning, it was saying that a lot of nonprofits have not applied yet who maybe are eligible. And so we'll talk about it in some real basic terms. There's two basic programs that come out of the CARES Act, which is the EIDL, the disaster loan, and then the Paycheck Protection Program. The Paycheck Protection Program can go up to 10 million, and it's 2.5 times your monthly kind of payroll. And I'm going to kind of say it a different way. What does it cost to keep someone on your payroll? What is it? So that includes the benefits, and you're part of the benefits, you're part of the retirement contributions. It's good because you can, you don't have a guarantee, you're not collateral, the rate's very reasonable at 1%. You don't have to pay anything that's not forgiven, you don't have to pay for 6 months. After 6 months, you get 2 years, and you're not getting any fees. So the basic program. But let's go back a step. When the CARES Act was passed, Congress wanted to get money out to folks. They wanted to do it in a very quick fashion. The natural tool to use was SBA, because of its 504 and 7A programs, which are operated nationally, along with the IDL, which has been giving money into regions that have suffered from hurricanes, tornadoes, whatever the natural disaster is. It's never done a nationwide program before. The other thing historically that we look at is the other way that we can touch businesses is through banks. And we look at that through Y2K and some other programs. Regulators are able to get to businesses to kind of direct policy. And the banks also have loan accounting programs and have the money and ability to disperse that. So in a very quick order of time from when this was passed, the banks were told to get up and running to start taking these applications. This has led the guidance to the banks kept changing in that week between when it was passed and when that window opened. That led to a lot of confusion. And so what you have seen, and you'll see in the headlines, is kind of the missteps that happen along with that. The banks, though, I got to say, and watching what's gone on, especially with my colleagues and my competitors, they've done a wonderful job. They have worked night and day to make this program work. It's not perfect, and there's some frustrations around it. Everyone's trying to do what they can to address certain issues. There are going to be a lot of lessons learned when we look back at this. So going back to the program as I described it, and we go to the next slide. Steve, okay. We have a lot of qualifications that come in here. The SBA has some pretty standard qualifications. They've expanded at this time. Independent contractors, sole proprietors are generally not eligible for SBA loans. They're in here. You have tribal businesses. You have new guidance on partnerships and LLCs. But today, really, because we're talking about nonprofits, the main thing is that if you're 500 or under in employees. If I can go to the next slide, is the one I kind of want to focus on. So that one after, well, here's what, and I'm going to let Chris talk a little bit more. This is the one I want to talk about, because what I'm assuming right now for most people, you've heard a lot about the PPP loan, and it's kind of what, if you haven't applied yet, what I'm hearing is that some people are not sure what paperwork to provide, kind of what are people looking at, how do I determine amounts? There's some questions on that. This is what I use to actually underwrite loans, and I've underwritten several of these now. And I'm going to tell you kind of where I'm getting the information from. Salaries and wages obviously is a big part of this. And you've got tax returns you file quarterly called the 941s. You've got a W-3, which is what you annually report to the IRS. And you also can get information, and this is where I generally try to use it, is your payroll register. Each one of these, for various reasons, will have some different amount, but what I'm looking for is gross wages. And the best place for me to get that is your gross payroll register. So I would include that in any loan application that you have. The other part, which is important here, as we've had Heffernan talking about healthcare benefits, is that your employees, you're having them contribute to healthcare benefits, but generally as an employer, you are paying additional amounts. What did you pay in 2019? Now, I like to use 2019. You could use the first couple of months of 2020, but 2019 is generally easy to pull out of the system, your accounting systems, and get. So what did you pay for that? And the other part is, like I said, payroll registers, these documentation I have, but then help me do my job by giving me some of the statements showing what you did, or showing me your GL registers to kind of verify. I want to be able to show people that I made some reasonable attempt to verify these numbers. The next thing I'm going to look for as I'm going through is, what you pay in retirement benefits? If you have a 401k or a 403b, did you do a matching amount? And what was that amount? Now, the other items can also be like local and state taxes, and that's going to come up with, what was your annual payroll? What did it cost to keep your employees on the payroll in 2019? Now, we're going to look back at the payroll and see if anyone made over 100,000. And if that is, we'll take the amount in cash compensation over 100,000 and deduct it. We take anybody who's not in the US. This is really just for US companies, makes sense. And are there any other items that regulations, and not many, I've not really used this category. Is there something else I would deduct? As we deduct these subtractions, we come to an amount, we divide by 12, we get an average payroll, and then we just times that by 2.5. So that's really kind of in a nutshell how we determine what the amounts are. And what I would look up, there's several calculators on the internet and stuff there. If you need some help, let me know. And really the thing is, if you look at that, your application from the SBA is very simple, and then you provide me kind of documentation about where'd you get the numbers. So next slide, please. There's another loan program out there, economic injury disaster loan. This is what the SBA uses if we go into some place that's been hit, say, by a hurricane or something like that. Now, this again was something that came out. It has a 10,000. Next slide too on that. It kind of gives we've got a $10,000 advance that's associated with this. That's what caught a lot of people's attention. It is a loan. It is not forgivable. It is up to $2 million. Now, here's the problem. I'm going over this. I'm going to let you lead that, because what happened was that Congress put another $60 billion into this program, and that window was supposed to open on Monday. SBA said it had already had enough applications from the prior round and did not open up the window. But it is a loan. It is something to be aware of, so I would watch that. And it's going to give you a 30-year amortization, so very low monthly payments. And you can defer the payments for the first year. Next slide, please. Okay, and the next one after that. So these are just kind of comparisons. You'll see the dollar amounts, you see the term, you see interest rates. One has guarantees required, one does not. Again, I don't want to take up too much time on that. So let's go to the next slide. Okay, so Chris is going to be coming up, but let me tell you a little bit more about the status as we are today. Round one, 350 billion went out and was closed about a week and a half ago. When that money ran out, banks kept processing because the Treasury said there was going to be round two. Round two got approved, and there was a backlog of applications. Now that window for the 310 billion opened up on Monday. Meanwhile, several of the banks did a lot of things to automate the process. They overwhelmed the system with volume, so it was crashing. So now there's currently restrictions in. Even though there's a lot of restrictions, which is slowing the submissions, my feeling is probably we're at a point on the PPP program where a lot of the funds are gone. If you are thinking about applying and you have not applied, I would suggest you do it right away. My program happens to be shut down at the moment, but look at the fintechs, look around, look on the internet. A lot of the banks have closed the window because they've just had so much volume. One of the main things, I didn't say it earlier, was that you were looking at a program with a potential of $3 trillion in demand. You had a 350 and then you had a 310 billion allocation. You can kind of see where that led to an overwhelming amount of demand. But if you're going to do it, if you're going to apply, I'm going to repeat the message: apply sooner than later. Is there going to be round three? We don't know. I'm not hearing a lot of rumblings. I'm hearing some. I'm not hearing any guidance from the Treasury that they think there will be. But if you have questions, you have in the earlier slides, you have my phone number, you have my email address. Please reach out and we can walk you through. And I'm going to let Chris talk. Chris is a partner at CFOs to Go. I've known the firm a long time. They're very good at doing a lot of the accounting aspects, preparing businesses to do a lot of things. Chris is coming to us live from Hawaii this morning, where he's been sheltering in place. And I'll let him talk about the forgiveness piece.
And Chris, you are self-muted, so if you can unmute yourself. There you go.
Great. Thanks, Paul. So I'm going to try to go through here real quick. If you haven't submitted the PPP loan application yet, as Paul suggested, you want to go to your bank that you bank with currently as quickly as you can, as the second round of funding is running out quickly. And as Paul said, his bank has already stopped at accepting applications. So if you submitted a PPP application and it's been funded or approved, oh, by the way, if you haven't submitted one yet and you need help, we at CFOs to Go have created a practice to develop audit-ready bulletproof packages to be submitted to your bank with everything that Paul outlined to help the banks easily verify your funding application. But if you did submit the application and it's been funded or approved already, it's time to jump on the loan forgiveness portion of the process, and we suggest that you start doing that now. We believe that most banks do not have the systems and the processes, much less clear direction from the SBA on the extent and of their role in the loan forgiveness process. So we recommend you start preparing your loan forgiveness and documentation support now. Now, here are some questions about that loan forgiveness. So what will be forgiven of the PPP loan that you receive? Well, you're going to be forgiven for 8 weeks of the payroll costs and everything that qualify as payroll costs, including the benefits, state and local taxes. In addition, 25% of loan forgiveness can cover business rent, mortgage interest, and utilities. There's a lot of detail behind all of those. And again, if you don't have the bandwidth and understanding of all that, we'd be happy to help. So can your loan forgiveness be reduced and why? So yes, the intent of this program was to help employers to retain or restore their headcount that may have been laid off or furloughed. And so if you don't actually restore your headcount to these various baseline headcount requirements in the program, then your forgiveness can be reduced. Similarly, for those of your employees that are earning less than $100,000, if you reduced their salaries during this time that we're going through, if you reduced it by more than 25%, then that will also contribute to reducing the loan forgiveness. So what reports are going to be required or accepted to support loan forgiveness? Well, the simple answer is payroll reports from your payroll provider, similar to those that Paul was discussing, such as a payroll register for the 8 weeks that are being covered, will need to be provided. Similarly, invoices and payment records for all the benefits, state, local taxes, and non-payroll costs that will be forgivable will need to be included as well. So let's go to the next slide. Steve, if you could go, thank you. So this slide highlights some of the, can go back one slide. Great. This slide highlights some of the tactical components of assembling your PPP forgiveness support for your bank. So there's a lot of details here. I'm not going to go through them. I don't have time right now. We recommend you use your system to help bucket all the expenses so that you have a good audit trail that you provide for the information that will have to go to the banks to support your forgiveness calculations. As CFOs to go, we've continued to develop significant subject matter expertise on all of the PPP requirements, and we continue to stay up on top of the ever-evolving guidance from the SBA and the U.S. Treasury Department. We, earlier in the discussion, it was suggested that you can defer some of your health insurance and workers' comp forgiveness or workers' comp expenses, but remember that forgiveness of those expenses will require that you've actually paid them. And so you'll need to weigh which one works for you. If you have a PPP loan, you may want to be making those payments because they will be forgiven. We do believe that there are a lot of challenges in aligning the payments and the periods with the 8-week forgiveness period. And if you don't have the bandwidth to build the support and documentation needed to maximize your loan forgiveness, we recommend engaging a trusted CFO consultant like one of us at CFOs to Go or another that you may already have as a trusted advisor. We've developed a PPP forgiveness service offering that will help companies quickly and efficiently prepare a crisp audit-ready documentation package support for their banks. As I said earlier, we think that the banks are going to struggle with this because they have never been set up with process and systems in place to help them do this. And so we've developed a template and a process to help the banks, to help employers submit audit-ready, easily verifiable documents to their bank. And as we've been telling all of our companies and our clients, we believe that the banks are going to help the borrowers that have helped themselves best by creating such a bulletproof support package for their PPP loan. And like the application and initial funding itself, we believe small businesses that are ready with those documentation packages first will be forgiven first. So you can go to the next slide. So we've talked today about the PPP program. Paul also talked about the EIDL program. As Paul said, this funding, as soon as it was announced, it was almost fully gobbled up. We at CFOs to Go actually do believe that there will be more tranches of funding coming because we will see the same type of reports we saw in the first ones that nobody had a chance to get to the loan window because all the funds were already gobbled up. So in addition to the loan programs, there are a number of other programs available through the SBA, as well as existing programs that preceded the CARES Act process. So a couple of those, I won't go into any of these in detail, but employee retention credits, which you can get credits. If you don't have the PPP loan, you can get credits that are designed to incentivize companies to retain their employees, and you can get up to $5,000 credits per employee. But again, you cannot take those credits if the company has PPP. Earlier speakers talked about the Family First Coronavirus Response Act, so I won't talk about that, but that helps in providing sick and family leave wages. There's SBA debt relief available. So the SBA is going to automatically pay the principal, interest, and fees on current S7A, 504, and microloans for a period of 6 months, including those new loans that were just issued and all those that are going to be issued through September of this year. In addition, if your disaster loan that you already had was in regular serving status on March 1st, the SBA is also providing automatic deferments through December 31st. And then there's also opportunity to defer your Social Security taxes that you're paying for your employees until, and you don't have to actually end up paying those until December 31st, 2021, and then the other half of those are due at the end of 2022. So I know I went through all this real quick. We certainly at CFOs to Go are available for support in helping you address any of the needs on the PPP program, either on application or on forgiveness. So I'll turn it back to Steve. And we can go into the Q&A.
So this is Deb, and I do have some questions that came up. So if our panelists can all unmute themselves, then we will get to these questions here. So we have a question that came in for Paul. What is the likelihood of PPP being awarded to an organization that has submitted prior to the closure of the first PPP release?
That's an interesting question because I would think by now they should have been submitted into the portal. A lot of people who didn't get funding on round one were continued to be processed by the banks and were submitted. So there's probably some details I could probably take offline.
Okay.
Honestly. Be happy to answer that.
So
because you have to kind of figure out where it is and what the bank is and where the status is. So
I can comment on that as well. So we've been monitoring many banks through this process, and all of them are operating at different pace. Many of them are not communicating frequently with their customers for those loans that are already in process. But I think to the degree that you got your loan application in for the first round and it just never was serviced because the funds ran out, then we believe that there's a likelihood that your loan package is being processed against the second round of capital. It may take a while, even after you hear that the second round has run out of money, to hear back from the bank that the SBA has given them an approval, a loan number. But stay patient. Connect with your banker if you can. A lot of the larger banks are not actually taking calls, so it's very difficult. But just stay tuned in for communications coming back from your bank, because your bank may all of a sudden get to your loan that's in the queue, and then they may need additional information in
So
which they're going to require
let
you
me,
to get back to
let
them.
me say something, Chris, is that if the industry is going to be faulted for something, it's been communication, particularly in the larger banks. And so it depends on the bank or where it's at. What you want to go back to that bank is, if you can, push, people in essence have said stock their banker, to get to see if they've gotten an E-Tran number. The E-Tran number is important in this because that is your reservation number. And so you may have one. And what's also a part of this process, why it gets delayed, is you're submitting thousands of apps an hour. But the part that's also a bottleneck right now is documenting these apps once they've gotten the E-Tran number. So depending on how their documentation process is, they may have an approval for you already. You don't know it because they haven't communicated, and they're just trying to get through the documentation process.
All right, we still have just a few more questions. If everybody just can hang on there, I think we can be done with this pretty quickly. So there was mention that the EIDL is a loan, not, but there is a $10,000 grant associated with it. Does that grant need to be paid back?
That's a good question. I let the SBA websites kind of talk for themselves on that. Because I understand it was maybe forgivable, but Chris, I mean, if you've got some better information on that.
I can speak to that. So many of the people that applied for the EIDL will not get approved for the EIDL, but get the $10,000 grant money or $10,000 portion advanced to them, and that will be a grant and will be forgiven. However, in our case, with many of our clients that applied for EIDL, many of them did get funded, and those that did get funded did not have a $10,000 component of that EIDL loan that was set aside as that forgivable grant, so to speak. And there are cases in between as well. There are some instances where companies were approved for the EIDL and received the grant, the $10,000 grant. And then lastly, on the EIDL, on this first round of funding, EIDL ran out of its appropriations and they didn't end up doing the $10,000 grants. And part of the $60 billion in the new appropriations was supposed to be set aside specifically to cover those $10,000 grants.
Okay.
And yeah, if you go to the SBA website, unfortunately, the SBA refused then to accept apps where it was supposed to do. The other part of this is that pick one or the other with the PPL. If you have an EIDL and you get a PPP, it will pay off the EIDL.
Okay.
But,
So I'll add on another thing there. So you can apply for both a PPP and an EIDL. If you had already had an EIDL prior to submitting a PPP loan application, you need to disclose that in the PPP loan application. But you can apply for both, you can get both, and you just have to be careful because they can't both be used for the same purposes. So the process, and this is true with all the SBA programs, they're designed so that there's no double dipping, so to speak, in using funds for the same needs. So make sure you're aware of that.
Okay. And we're getting questions pouring in now. So if we run completely out of time, we will follow up with your questions after the event today. Many of the organizations in the CDSA membership are primarily funded by the state of California. Since the funds awarded to our programs from the state presume the funds being used to retain employees, is there any risk to utilize the PPP funds for employee expenses as the primary payment for retained employees instead of state funding?
I don't think there's clear guidance on that because a lot of the organizations are going to be funded by regional centers.
Okay.
And there's some mandates and state funding and all of that. Only PPP on the application, I've not seen any part that asks those questions like what they're asking.
Okay.
I can tell you from my private schools, which deal with, I do have some schools that deal with autism. And they did take the PPP despite the school district funding because they were going to do some other training programs and things like that to help retain teachers.
Okay. And
so I will leave it to other people to advise on that particular part of it.
All right. If a company received an E-Tran number for the PPP loan, what is the chance of approval?
Good. You got approved.
If they received an E-Tran number, that means the that funds were allocated by the SBA for that specific loan, and that in a sense is a suggestion that the SBA has approved the funds. And then the bank just has to go back and complete their documentation process and with the borrower, and that should be an indicator that the loan was approved.
All right, we'll do.
That's what I was saying, is that the documentation is a bottleneck right now.
Yeah.
It takes us on average of about 2 to 3 hours to document a loan, where it takes only a couple minutes to necessarily approve. So you've seen this large volume come in, especially if you got approved towards the back end. It's going to take a little longer. We've got 10 days to get it out and get you signing it. And I know in our case, we've got people, volunteers throughout the organization trying to get these things out. I think most banks do.
All right, and we'll do one more question here. How does the PPP loan forgiveness happen? Is it automatically, or do you actually have to go through and apply for forgiveness?
You have to go through and apply.
That's a great question. So, I spoke about that. So you will need to apply. The banks at this point, many of the banks don't even know what their role is in the process, and in some of their loan documentation actually expressly represent that they do not have a responsibility to participate in the loan forgiveness application and review and documentation process. However, we believe all the banks will be doing that. That'll be delegated to the banks by the SBA. And there is a process. I kind of went through it very quickly, and it could get complicated for some companies because like I said, you're going to get forgiven for the 8 weeks immediately following loan disbursement. And those 8 weeks may not coincide with your normal payroll periods, and they may not coincide with the other expenses like the medical health benefits, et cetera, workers' comp insurance, et cetera, that you're paying on a monthly basis. Or maybe once every 6 months, or your employer matches on your 401k plans. And so, like I said, it could be complicated if you don't have sophisticated internal financial management. And that's why we've actually built packages. I've spent the last few days building intellectual property, I guess, for CFOs to go so that we can build an audit-proof, bulletproof package for the banks.
So what, just kind of building what Chris said, not to be too redundant, but that in essence, we haven't had guidance yet from the SBA.
Got it.
That's what's going to dictate a lot of it. So there are open questions about what is an FTE. That'll be an important part of the equation. And so it's something to stay tuned on, and people like Chris and everything who are following it. That's why I have Chris here today, because I can't speak to it yet. I just don't have the guidance.
Got it.
And we do have the guidance across most of the subjects. There are still a couple big outstanding questions on how the forgiveness is reduced if you don't restore your headcount by June 30th. There's also some questions regarding whether or not the expenses forgiven have to be both incurred and paid within a certain time period. Those are the things we're tracking very closely. We actually have an ex-deputy CFO of the SBA from Washington, D.C. On our team as a partner, so we've been able to look under the covers and get into the SBA. But we too are still awaiting guidance, but we're probably among the groups across the country that are kind of most on top of that.
All right. Well, it just goes to prove that things are changing on a pretty frequent basis, and we may be having another webinar soon. So I'd like to thank everyone for attending today's webinar presented by Heffernan. We will send information by email with instructions on how to access a copy of the presentation on the website. And thank you to all of our esteemed presenters for your time and expertise today. We hope all of the attendees found today's webinar to be a valuable use of your time, and be sure to join us on May 5th for a webinar for active shooter armed assailants response, which is training for the DHS Run, Hide, Fight protocol. So thank you, everybody, and have a safe day.
Thanks, everybody. Stay safe.